Coloring Crypto.
All right, folks, we're back with Cousin Dave, back by popular demand. We had a lot of great responses to that podcast. Some people saying it's the best episode for beginners. So welcome back, Cousin Dave.
Hey, Gabe. It's great to be back on.
So, man, the last time we talked was 2.5 months ago, and you made an interesting comment that you almost lose a little sleep more when the price of Bitcoin goes up. And today's Thursday. I think it hit something like $16,000 or $19,000. So it's been going up crazy. What's been going on for you?
Yeah, it has been crazy, and you're right. It makes me more nervous when the price goes up. You know, I looked at my Facebook feed this morning, and I wouldn't have even checked the price actually, but all these people were posting about, you know, they made $1,000 last night, or, you know, Bitcoin went up 18%, all this craziness. And one of my friends, he commented that he was getting off of Facebook because all he saw was politics and I forget something else he didn't like. And I said, oh, my Facebook feed is blowing up with Bitcoin. And he's like, what, because of the hack last night? And I was like, no, some of my friends made like 18%. And I commented, I was like, no, you know, probably not 18%, but you know, they made a lot. And then I went and I looked, and it was like up 25% from yesterday. And you're right on. That makes me nervous. You know, the price is accelerating so fast. And all the people I talk to now who are getting in, like I just talked to somebody yesterday. She's an expert on Bitcoin now because she heard your podcast. I think it was episode 12 with the Pantera Capital guy.
Yeah, with Nico.
So she knows Bitcoin is going 100x. Even though I've been talking to her about Bitcoin for 4 years, you know, she's an expert now, and she wants to buy Bitcoin. And that's what makes me really nervous, is that you've got all these people coming into Bitcoin, and they don't even know what it is. They don't know how it works. All they have is dollar signs in their eyes. And I think it's a very dangerous place to be. You know, it could go a lot higher, but this could also result in a big downturn because, you know, if for some reason there is a correction in the price, then these people who have no basis for buying this other than they want to make money, you know, if they lose 20% overnight, that's going to make them not sleep so well. Especially, you know, there are people out there that put their rent money on the line or their mortgage money on the line, or even worse, some of these people borrowed money to buy Bitcoin. Because, you know, if you're making 25% in a day and you borrow $10,000 at 20% on the year, you know, you just paid for your whole year's borrowing in one day, and everything else is gravy. So people do things like that. And then when the price drops, they're in really bad spots and they have to sell when they don't want to. And when the price drops, then all of a sudden people are freaking out when they don't know anything about Bitcoin and they just wanted to get rich and now they're losing money. Then, you know, they're really worried about, should I sell? Should I sell? Is it going to drop? Is it going to drop? Should I sell? And a lot of them sell. This happened about 2 or 3 years ago. Actually, I was talking to a friend and she was like, I forget how much Bitcoin had dropped. I don't know if it was 20% or 30% in a day. I don't remember. But she was freaked out. And she messaged me. She said, hey, you know, what's going on with Bitcoin price? And I'm like, I don't know what's going to happen to it, but I'm holding. And she said, I sold. So, you know, within about 5 minutes of her reaching out saying, you know, what's going on? Should I sell? She had already sold because, you know, there's that fear. You don't know, you know, am I going to lose everything I just put into this?
Have you been selling any as it's going up like this?
I have not, but I have been thinking about selling. The faster the price goes up over a short time period, then the more likely that I am to sell, because I do think a correction is going to come at some point, and who knows if that'll be, you know, the price wherever it is now, and I could see it dropping 50%, or it could go up 5 times from now, and then drop down 80%, or, you know, 10 times from now. But I do think it's going to get overbought at some point, similar to how tech stocks were overbought in the 90s and then crashed. So the NASDAQ, I think, peaked around 1999 or maybe 2000, and then it didn't hit that peak again until maybe 2012 or 2014, something like that. And I think we're going to see, unfortunately, the same thing in the crypto space, where at some point, not at this level, because we're at, I think, like 400 billion, and I think it is going to be a multi-trillion-dollar industry. But I think at some point it's going to get overbought, and we're going to see a big correction. And then with Bitcoin in particular, you know, I could see that happening, you know, with so many people piling in. And the price going up so fast with no underlying justification for it.
Have you been paying attention? Like, what about other currencies like Ethereum and altcoins? What's been happening with those during this incredible spike of Bitcoin?
You know, I don't watch many of them too much. I go to some Ethereum meetups, and that one is really exciting. It kind of reminds me of how Bitcoin was in 2013, when people were, trying a lot of different things and getting excited about what they were doing. The Ethereum meetups in Michigan, they get like 60 to 80 people with these big wait lists, and the Bitcoin meetups, probably get like 10 to 20 people. And the conversations, honestly, unfortunately, at the Ethereum meetups are so much more exciting than the Bitcoin meetups, because at Ethereum it's all about ideas, pushing the technology forward, bringing value to the world. And the Bitcoin meetups today, which was the Bitcoin meetups back in 2013, it was all about what can Bitcoin do for liberty, for the poor people of the world, empowering people. But today, it's a lot about small block versus big block debates. And a lot of talk about the price.
I mean, would you say, like, from a novice perspective, like, so Bitcoin has gone up 15% or 16% in the last 7 days. Ethereum has gone down, or actually it's at about zero. It's funny, just in this conversation, it went from negative 0.13 to positive 0.26%. But do you think, is that just the brand name of Bitcoin and just the hype? And it's just because, I mean, why would Ethereum be flat and Bitcoin be rising like it is?
Yeah, I think most people are getting into Bitcoin. So I used to say a year or two ago, maybe even 3 years ago, that the best thing for Bitcoin's price is Bitcoin's price. Because when Bitcoin's price goes up, all of a sudden you got your high school buddy that bought, a few $100s worth, and now it's worth 100,000 or something like that. And people have been hearing these stories for years. And now they're tired of it, and they're like, I'm getting in. I'm not missing out this time. So, now a bunch of my friends, they call me up out of the blue, and they say, hey, I want to buy Bitcoin. And I'm like, oh, that's weird. I've been talking about this for 4 years, and you want to buy now, after it's run up, I don't know, like 100x from where I got in. I think people, I was talking to a friend, I don't understand that mentality, and maybe it's just because people are chasing the returns. They're looking at the past, and they think that the past is going to project into the future, which in general is probably a good strategy for most things. But in the financial markets, there's a saturation point, and it's funny too at bars and things. Sometimes people ask me when I got into Bitcoin, and they think I'm going to say like this summer, because that's when they got in, and they feel like longtime holders because they've been in 3 or 4 months.
Right.
And the prices went up maybe I think it was like 3,000 back then. So they've gotten like 5x on their money in like 4 months.
Hey, one thing that has happened since the last time we talked was the SegWit 2x split for Bitcoin. It didn't happen, but you mentioned you have some Ethereum Classic from a fork. Can you kind of explain what that means and sort of relate it to these hard forks that we hear about for different currencies?
Yeah, I'll back up a little bit too, and I'll talk about the theoretical idea of forks as I understood them when I first started reading about Bitcoin back in 2013. And so Bitcoin is a chain of transactions. It's this ledger of transactions. So if I send you money, then it's on this ledger that everybody can see. I moved money from account X owned by me to account Y owned by you. And these ledgers is called a chain, and there are rules that govern each chain, that make the Ethereum network different from the Bitcoin network. And so people were always aware that forks could happen, but they were the thinking before they happened in the real world, before the Ethereum Classic fork, was that only one chain would survive. Nobody thought it would make any sense, to have the Bitcoin chain, have it fork with a different feature. Let's say we wanted to change the hard cap of 21 million Bitcoins to 25 million Bitcoins. The thinking was, if a rule change like that happened, one version would die and the market would switch 100% over to the other one. And so there wouldn't be two surviving, Bitcoins. There would only be the one that either has a 21 million cap or the 25 million cap, and the market would support that, and all the ecosystem would get behind that, and the other one would just die.
What were the rules originally for Bitcoin about introducing new, I don't know what you call them, new rules or new algorithms, new components to Bitcoin?
Yeah, so it's this laissez-faire, no centralized control, market decides idea. So that was actually a feature of Bitcoin, and one of the things that I got excited about Bitcoin, people would ask, aren't you worried the developers are just going to change the code so they make themselves rich and everybody else poor? And I was like, no, I'm not worried about that because nobody would adopt that version of it. If Microsoft launches Windows, if they go from Windows XP to Windows Vista, and nobody wants Windows Vista, they can't force you to upgrade. And Bitcoin worked the same way, where anybody in the world can release a new version of Bitcoin, but then it's up to the market to adopt that. And so that was one of the exciting things about Bitcoin, because it would let there be monetary competition, your guest talked about in episode 12, and so that the idea thinking was that Bitcoin would always be getting better and better, but the thinking was also there would only be one version of it at a time, and you wouldn't have these hard forks. But last year, when Ethereum made the decision to hard forks, actually, the team debated this, and they talked about it, and they decided to make this hard fork, and it was a shock to everyone when Ethereum Classic survived and didn't go to zero and die like everybody thought it would. And that set up the precedent for this Bitcoin Cash split that happened on August 1st.
Yeah, explain the Bitcoin Cash fork.
Yeah. So when I got into Bitcoin in 2013, I got excited about it because I saw an analogy between email and letters, and between money and Bitcoin. So I thought Bitcoin was really exciting because now anybody in the world could get paid, instantly and for free. Back then it was free to send transactions, and they confirmed essentially instantly. If I made a payment on a website, as soon as I hit that send payment button, I would see a notification on the website, your payment has been received, and it was really cool. And that got me excited because just like how dropping the cost from communicating with somebody and making it instant, has increased communication so much. I thought that having fast and free sending of money all over the world was just going to enable so much for humanity, unlock so much potential, and be really great. And so that was the vision that I bought into in 2013. I'm trying to remember, maybe it was late 2014 or 2015. I have trouble remembering exactly. But, Bitcoin, just was increasing in usage ever since I bought in. More and more people wanted to use Bitcoin because they loved it, and it's free and it's cheap. And there's capacity on the network. There is the miners, they process transactions, and there are rules on how they process those transactions. And one of the rules was this block size limit of 1 megabyte.
So yeah, let's just explain for our listeners, what does that mean, a block size of 1 megabyte limit?
So Bitcoin transactions are communications, and it takes some data to communicate that you want to pay somebody. So if I say send Gabe, $5 worth of Bitcoin, that takes some data to construct that message. And we talked about those messages being written to the ledger. And so that ledger, depending on the size of the messages, is going to grow every transaction multiplied by the size of the transactions.
And this is part of why people say that Bitcoin is slow, and it's really more of a stored value currency than a transaction currency because of that limit to the block size.
Yeah, that's what the small blockers would say. Yeah, they believe that there's, they think that in computer science there are fundamental limitations on networking process and block size that will stop Bitcoin from scaling. They call it on-chain, which is on the ledger. And so the idea is to have every single transaction that happen on the Bitcoin ledger. What they want instead is to have larger transactions happen on the ledger and have smaller transactions, if I buy you a cup of coffee or something like that, have that happen in a layer 2 solution, which you could, it's probably hard to wrap our heads around. So I'll give an example. If you think about your bank, if you go to the store and buy something and you use your credit card, you didn't pay out of your bank account. You paid with your credit card. And then at the end of the month, you pay your credit card once from your bank. So, if I spent like $2,000 on my credit card last month and I did 1,000 transactions, when that hits my bank account, it just looks like one transaction because I just pay from my bank to my credit card.
Was that second layer built into the original Bitcoin code, or is this something that had to be built?
No, it's something that had to be built, and they've talked about it for a couple of years. I think this week they just did some transactions. It's called the Lightning Network, is the primary layer 2 solution that they talk about, but I think that there could be many. And I think I read that there was a successful test transaction this week on the Lightning Network, which would be big news and increase the capacity. So
let's get back to where did Bitcoin Cash then come from? Like that was part of this?
So Bitcoin Cash. So I talked about small blockers. So the opposite end of that argument is big blockers. They say, hey, we have a problem now. We're constraining the amount of transactions that can be done every 10 minutes, but the market is demanding more than what can fit on this 1 megabyte limit. And since there's only 1 megabyte limit, we've got to prioritize transactions. And the way that happens is by either making people pay more so that their transaction confirms faster, or by making people wait. So those are the two options. And that's made Bitcoin slow and expensive. And somebody came to me in 2013 and said, hey, do you want to invest in a digital currency that's slow and expensive and used to settle big transactions? Yeah, I would have said no.
So on August 1st, Bitcoin Cash forked. And for you, that meant part of your Bitcoin just became Bitcoin Cash. Can you explain what happened?
I thought it was going to be completely different. I thought for sure this fork is surviving, and for sure it's going to be valuable. And I was so confident in this belief. I had my Bitcoins at Coinbase at the time, actually. And Coinbase said, we're not going to give you your Bitcoin Cash. And so I've got a lot of my personal net worth in Bitcoin, and I put it all at risk to take it out of Coinbase and put it somewhere else to make sure that I got those Bitcoin Cash tokens.
Where did you put it? Like in a wallet or a different exchange?
Yeah, I just put it, somewhere where it'd be safe, so hackers can't get it, and took it out of Coinbase. And I suspect there were a lot of other people that felt the same way, because when I went to do that a couple of days before the fork, because I kept hoping that Bitcoin or Coinbase would say we're going to honor both, but they didn't. And so when I went to do it, it was like 2 or 3 days before the fork, and Coinbase was having delays processing withdrawals because so many people were taking their Bitcoin out of Coinbase.
So for people that didn't take it out prior to that fork, were they left with no Bitcoin Cash?
They were. They don't have it yet, but it's been promised that Coinbase will give it to them in January of 2018, I think.
Huh. And so Bitcoin Cash, back to the argument of the small blocks and the big blocks, Bitcoin Cash, does it have a larger block?
Yeah, I haven't looked into the technical details too much, but I believe if I remember right, the blocks are 8 megabytes.
Why was the block not made bigger initially? Was there ever an expectation that the block would not be big enough, or was this how was this problem not predictable?
My understanding, I've never looked at the source code because the answer is actually in the source code, but my understanding is that initially there was no block size limit, and I can't remember if it's in the white paper, but I think I've read forum posts by the creator of Bitcoin, Satoshi, where he always said he intended there would be no block size limit, it would be unlimited, and instead there's still a capacity problem no matter what. It's not free to process transactions, and so the miners are bearing that cost. And so people like me, we'd like to see a fee market where miners compete based on fees to process transactions, and users put the fees on their transactions that they want to see. So that's the ideal solution from my perspective, is an unlimited block size with market-based fee pricing.
And is that part of the debate that some people think the original intention was that the block size should not change, and other people interpret it as the intention was that the block size should keep growing?
It's a little bit hard for me to do this without putting words in other people's mouths, so I'll just say it, and I'm biased. I'm a big blocker, and so I don't fully understand the small block perspective. I think the small block perspective comes from engineers who have not delivered software, have not been business owners and delivered software products. And I think the big block perspective comes from having had to deliver for customers before. Like, you don't want people to have a bad experience. And when transactions get slow and expensive, that's a bad experience. And everybody wants it to be, fast and free and efficient. But before you get to the perfect solution, I think people like me think you should just raise the block size limit to accommodate the people coming on board. There was a debate back in 2013, 2014, where so initially Bitcoin was designed to be cash, and it was, I send money from one person to another fast and for free. But people realized there was another benefit to this technology where you've got this ledger that can't change. So if you put a fact in there, other than that, I paid Gabe $5. If you put a fact in there that you never wanted to forget, like, I own this house, and you want the whole world to be able to verify that, people realize that this is really, really valuable. And so people started putting other things in there that weren't money transactions. I think the first at scale, widely used mechanism there was this website called Satoshi Dice, I think, from Eric Voorhees. And so it was a gambling website where you could go on there and gamble. And I never used it myself, but I think either the results of the bet were stored on the blockchain, or that the blockchain itself was used to ensure that it was random betting, so it was fair betting and that the site isn't cheating you. But this thing started to use a lot of transactions. And so that's got pluses and minuses. Like, one, it's great because now all of a sudden this blockchain thing is like getting used a lot. On the downside, now all of a sudden, if you're a miner, you're storing these betting transactions, and maybe it's maybe for like a half of a penny or for a tenth of a cent or whatever the numbers are. And maybe that's not exactly what you signed up for. Like, maybe you don't want your hard drive space going to that, and you don't want your bandwidth going to that. You're there to support Bitcoin. And so there was this debate in the community about what's a valid transaction. Is it valid if I put the fact that I own my house on there, or my social security number, or my DNA, or whatever? If I put that information on the blockchain, is that valid, or is it spam, or is it an attack on the network? And so there were all of these types of questions. And I think that if I remember right, the 1 megabyte limit was just instituted just as like a spam prevention mechanism. And I think the idea was that it would always, increase as the volume increased. At least that was my understanding. And it was a real shock to me when all of a sudden there was even a debate about this topic that, like, we're not going to raise the block size limit, and we're just going to like raise fees and make people wait to process their transactions.
It's been interesting with this surge. I've been seeing a lot of people on my Facebook feed who are just getting into Bitcoin or just learning about it, or suddenly their ears are very perked up. And most of the most common article I had sort of posted on my wall and forwarded to me was an article about the amount of energy it takes, the amount of power it takes to do the mining worldwide. And there was some quote, I might be paraphrasing, but it said that by 2020, the amount of power required for the Bitcoin blockchain will be equivalent to the amount of power that runs the U.S., which sounds a little crazy. But we did an episode 10 on kilowatt hour coin, but this is a problem that's been addressed, and it seems to be one of the things that people that are new are concerned about more on like an ethical level. What are your thoughts on that?
Yeah, so I'm not worried about it. I've never been worried about it. I think there are, and I also want to admit I have not looked deeply into the problem,
Yeah.
But I do know Bitcoin gets knocked on it for a lot. So one of the reasons I'm not worried about it is when people project out things, like that it's going to consume more power than the entire U.S. Like, just does that make sense? Does it make sense that we're going to have money that uses like more than all of the U.S. just to process our transactions? Just to me, like, on its face, that doesn't make sense. That doesn't mean that it's not going to happen, but it's like one of my strong like smells. And you could think about it too, like, if I jump in the air and somebody takes a photo of me, after I'm an inch off the ground, like, if you extrapolate that, you're like, oh, he's going to jump to the moon. At this in he's going to jump to the moon, in the next week or two.
Right.
But no, that doesn't make sense. So there's a few things coming. So I think essentially technology is going to solve this problem. One of the solutions could be, and people forget too that the miners have to pay for electricity. So if it uses all the electricity in the world or in the U.S., then they've got to think, like, what does that cost, and does that make economic sense? Because people aren't going to like lose money to process transactions for the most part. But we've got solutions coming down where, energy is getting cheaper all the time. And now we're going to things like solar power and things like that. So maybe it doesn't matter. Another thing that I'm really excited about is a new a new mining method called proof of stake.
Proof of stake.
And Ethereum is working on this called, I think the code name for it is Casper. And so the idea there is, instead of having these mined blocks by miners, it's good to think about mining like if you think about, gold miners. You could mine for gold and then sell the gold and never hold any gold. So you could be a Bitcoin miner and never hold any Bitcoin. And one of the concerns that I had about Bitcoin is, are the miners' incentives aligned with the holders of Bitcoin? Like if I'm Bill Gates and I've got $64 billion worth of Bitcoin, or Jeff Bezos at 100 billion, but I'm not a miner, am I at the whim of these miners where they can say, like, I'm not going to process his transaction, or, I'm going to extort him and say, hey, I'm going to hold your money hostage and never process any of your transactions.
So that's what's the proof of work is, in essence, the miners don't necessarily have skin in the game.
Yeah. And sometimes I think they mine empty blocks. And so there's this other idea, this proof of stake idea. And the idea there is essentially giving people voting rights based on how much of the token they control. So if you had like 10% of Ethereum, then you'd essentially have 10% of the hash power. You would use this proof of stake, and that would do the mining, and then that would really either drop substantially or maybe even entirely eliminate the electric consumption. The other interesting thing to think about too is that I haven't looked at the hash power of Bitcoin network in a long time, but it's, I don't know, 4 years ago, it was many orders of magnitude faster or more powerful than like the top 500 supercomputers, and now I'm sure the number is even crazier. What that's doing is providing security to the network. And do we need that level of security? Do we need all the electricity in the US securing the Bitcoin network? And does that make sense?
I'm looking up hash rate right now for Bitcoin, and it says that the estimated number of terahashes per second, trillions of hashes per second, the Bitcoin network is performing. And it's climbing at a pretty steady rate.
Yeah, and so all the hash rate does is protect from attacks. So if you knew that Bitcoin was never going to be attacked, you would need, I don't know, like maybe one hash per ever to do the transactions. But the lower the hash rate, then the more susceptible it is to attack. But somebody's got to have more power than you to attack it. So then if you think about using the whole U.S.'s energy, you're essentially saying that somebody would have to use more than all of the U.S.'s energy to attack you. But if you're just using, I don't know, 1,000 homes worth of energy or 10,000 homes worth of energy, is that enough to secure the network? And so the network, in my opinion today, is probably oversecured, but I'm also not a security expert.
What do you think about, with this rapid increase in price of Bitcoin, like where are we with the maturity of this and sort of, bigger buyers like Wall Street and sort of nations coming into this?
I'm glad you went back to that topic, because actually I forgot. So I talked about, when I first got into Bitcoin, I invested in a peer-to-peer cash system. And then it was a surprise to me, around 2014, 15, when there was this small block idea. And the idea was essentially, Bitcoin is not cash. We're not going to do coffee transactions on it. That's silly or stupid. We're just going to do settlements, big settlements, and thinking that it's like more like gold, where if you own gold, it just sits in your basement or is buried in your backyard or sits in a bank and you don't touch it, but you just own that. My thinking when Bitcoin and Bitcoin Cash split, I was really nervous. I felt it was horrible for Bitcoin because I felt like it lost, it's peer-to-peer cash. And so I was thinking, like, why would this thing appreciate in value if nobody's using it in commerce? But the same thing could be said about gold. And, if it's sitting in my basement, nobody's using it for commerce, but it just sits there and it's maintained its value for, I don't know how long, I'll just guess, thousands of years. And I feel like Bitcoin could be that same thing. At first I thought it was crazy when people are saying, Bitcoin's going to hold its value. But, we've just seen this huge run up, and people today buying, they don't care about peer-to-peer cash. They don't care about putting your mortgage or your deed on the blockchain. They don't care about helping people in Africa on the blockchain. They just care about, I want to, become wealthy on this thing or maintain my wealth or whatever. That's what they care about. And if that continues, then there's no reason it shouldn't continue. People just ascribe value to things. And so if people just say this thing is valuable, we never use it, but it's just valuable and it just sits in my online account, that is now starting to seem reasonable to me. It does seem hard for me to wrap my head around, why would somebody have something that they never touch and never use, just sitting somewhere, have that accrue in value versus something that's actually useful. But on the flip side, if you have, let's say everybody in the US had some Bitcoin, that's 300 million people that all have a vested stake in Bitcoin maintaining its value, and kind of like chicken, as long as nobody blinks, it's gonna maintain its value, even if it's not used. So that's kind of where my thinking is today.
This is a great summary, almost of the last set of podcasts, in that, utility versus security, where you initially thought Bitcoin as a peer-to-peer cash utility, it became more of an asset.
Yeah, it seems to be that's where it's positioning itself. It's also interesting too because this Lightning Network hasn't went through, and so if all of a sudden Bitcoin's this great store of value and transactions go back to being fast and free, then it's the best of both worlds. And it's got this brand, it's got all this infrastructure around it. My friends aren't calling me about buying Ethereum because they've never heard of it. They're calling me about buying Bitcoin because they saw an article. They've seen many articles about it, and all their friends are talking about getting rich on it. And they're seeing posts on Facebook about people, putting in $20, and now they got $25 the next day. And it's all about, Bitcoin, Bitcoin, Bitcoin. And so it's this huge brand. And getting back to your point, about Wall Street getting involved and nations getting involved, Bitcoin is the one they're looking at the most. And, it's a maybe not quite a mainstream idea, but it's like maybe the hot new thing. And it'd probably be fringe to be looking at something like Ethereum or something where.
It'd be really interesting to see of this recent surge of Bitcoin, how many of the purchasers contributing to the volume are brand new, owners of Bitcoin.
Yeah, I think I read that over Thanksgiving weekend, there were like 100,000 new accounts a day on Coinbase.
Wow. What do you think in terms of regulations? I read something where the SEC has a sort of digital branch, and they recently have kind of cracked down on some of like the scam ICOs. What's your sense of what's happening with regulations from the SEC?
Yeah, I see those headlines. I'm a libertarian myself, and so I don't get excited about regulations. I think on the whole, having other people tell people what to do versus letting people decide what to do for themselves is, it's one of those smells that I talked about earlier. I don't know if you've ever been happy when somebody else told you what to do versus you just deciding what to do for yourself. But I think unquestionably, it prevents some problems. But I think on aggregate, regulations hurt more than they help. And I think in the U.S., that's one of the reasons that there's this growing wealth disparity. And I think people look to government for the answer, but I think it's actually government's the cause, and government precludes people from doing things that allow them to become wealthy. I'm raising a fund right now, and I can't sell shares in this fund to people that aren't already rich. And if this fund does well and returns a lot of money to the investors, that just precluded a lot of people from making a lot of money. And I.
Oh, cool! You just dropped in the big announcement. I'd seen you posted on Facebook. You had an announcement coming. So this is the Bitcoin Fund. What's that all about?
It's the Bitcoin Strategic Trading Fund. I've done really well in Bitcoin over the past 4 years. You can just look at a price chart and take some guesses from there. But I haven't sold any, so I've done well, and I'm excited to be able to help other investors, who don't follow Bitcoin every day and who don't understand forks and block size debate and all this. Excited to help them have some comfort in benefiting from what I think is going to be a continued rise in the cryptocurrencies from a financial perspective.
If you had to guess, why is the U.S. making such harsh regulations around cryptocurrency, could it be that's how the big banks were threatened?
Yeah. So guess is a good word. I've thought a lot about regulations. I think it's interesting, especially I listen to a lot of podcasts, and there will be people who come from overseas to the U.S. Maybe they can't come from Russia or who knows where, and they are so excited to be in this country. And it's the land of the free, and there's all this opportunity. And it got me thinking about, if you go to a place that has less rules, it feels great. Like my son's 10 years old, and for 8 years maybe, I told him about these diving boards and like how I loved diving boards as a kid, but he'd never seen one because every pool has these things removed because all the horrible things that can happen. I guess when you use a diving board, you drown or you hit your head or who knows what. I don't know. I never saw anything bad happen, but apparently they're like the worst thing.
Yeah, you had one as kids. We'd visit you, and you guys had a pool and a diving board. It was great. So those are all. I don't know how we survived. Removed.
I mean, it's amazing we're alive. But we were in the South driving back from a family vacation, and we stopped at a park in, I don't know, it was like South Carolina maybe or something. But they had a diving board, and they had. And so usually at the pools too, they have all these rules about you got to pass swim tests and stuff. And my son's not a great swimmer. But they just like ignore all the rules and they're just like, whatever goes. And we just had this fantastic time. And so, I think about like when you go to a place that has less rules, it always just feels so much better. You feel free. You can do what you want. And sometimes bad things happen. But sometimes bad things happen no matter what. Like every day I get in my car and I drive somewhere, I could get killed right there. But that doesn't mean I'm just going to, stay in my house, in my room and never leave. So
less rules.
So then I started thinking about like, well, if less rules is better, why do we have rules? And it struck me that, when something bad happens, people want to make a rule. They have good intentions and they want to solve a problem. And so then they make a rule to prevent that from happening in the future. And so I think it's with good intentions, but then, like the longer that a country goes on, every year we have more and more laws. Lawmakers don't measure progress by how many laws they get rid of and how much more free we are, but by the laws that they passed.
Let's transition and talk to some listeners that may be on who have yet to buy any cryptocurrency. Last time we spoke, you mentioned for folks that want to get involved to get a Coinbase account and sign up. I think there's a lot of interest because of Bitcoin's rapid rise. How would you advise somebody right now to come in? Like, would you suggest other coins? What resources are you looking at? How should somebody approach this?
Buying a little bit is really good advice. If you buy a small amount of money that it's not going to change anything if you lose it, I think that's a good place to start.
And which coins have you got your eye on?
So right now, I've got a lot of Bitcoin and a lot of Ethereum. So I'm not planning on buying either of those two. That just, really wouldn't make any sense for me. And so my situation is a lot different from other people. If I was coming into it new, I think it's a challenge to figure out. I said earlier that, there's no question in my mind that cryptocurrencies are an invention and that they're going to be really valuable. But I don't know if it's going to be, Bitcoin, Bitcoin Cash, Ethereum, Litecoin, Ripple. And so I'm fortunate in that I've got diversification where I have all those coins. And so, if any one of those wins, then I'm in a good spot. But someone that comes in new and they just buy one, then they're betting on one horse and who's going to know who's going to win in the future. If you do bet on just one, and I think Bitcoin is the clear one to bet on, because going back to it, it's got all the infrastructure and the brand. If my high school buddy buys one, he's going to be buying Bitcoin. If Jamie Dimon from JP Morgan Chase buys one, he's going to be buying Bitcoin. So I think if you just bet on one, that's the one to bet on. And I think starting with a really small amount of money is a good way to start, unless you're an experienced stock trader. The challenge with that though, too, like, if you just buy $5 worth, and maybe you make like $100,000 a year or something, if that $5 goes up 20x or something in the next 3 years, your $5 went to $100. Since it wasn't a lot of money for you at the beginning, it's not going to be a lot of money for you at the end. And you're going to be kicking yourself and saying like, I should have put in 20,000. Now I have 400,000. On the flip side, if you put in the 20,000, and then instead it drops, 75%, and all of a sudden you got 5,000, you're going to be kicking yourself and you're going to be like, oh man, this Bitcoin thing was stupid. So.
And it could go either way. The thing I worry about is, I mean, having been in, audience measurements in 2000 for the internet, we were privy to the audience reach for all the major websites, and those numbers would come out and they'd impact the stock market. And I think about that. How many people work at Coinbase who, before Litecoin was listed on Coinbase, they knew about it. And obviously it's insider trading, but I'm sure a lot of people that figured out, Coinbase is going to do that. It's a lot of power for one company to have to list and unlist on their exchange that's going to move markets.
Yeah. That's true. I think there's a lot of shadiness like that I don't know if it's shadiness really. I mean, I don't really actually know if there's a problem with that. And insider trading, I mean, I don't even know if in my world, it probably wouldn't be a crime. And I saw one of my the people I know actually was prosecuted for one of these insider trading deals. And it was really scary reading this thing. There was no evidence. There's only circumstantial evidence, of what happened. And it was only like probabilities. And it's like, oh, he talked to this person and he did this and his account made like the biggest trade ever that it had ever done. So it was outside of the normal range. And the whole thing was really scary to me because I'm like, wow, if I just, had these same type of circumstances, which would look exactly like what happened when I bought Bitcoin, all of a sudden I could be prosecuted for insider trading, even though it never happened, because in this case, there was no evidence. And him and like 3 or 4 of his family, he pled. Him and like 3 family members, I think, they pled. There was one guy in it who fought it, but he worked for like Northwestern Mutual maybe, or one of those financial companies, and he had a license, and he advised some of his clients to do it, and they ended up making maybe like $2 million on it or something. He lost his license, couldn't do his profession anymore, and he was on the hook for all of those gains. He had to probably pay the SEC or something like that. So really, really heavy-handed. But the other thing I was thinking, I was like, my friend's not a dumb guy. I'm like, how did this happen to him? Because me reading that case, I could do insider trading, but make it look like I'm not doing insider trading. Because there's no evidence for it. It's all circumstantial. Right. So all I have to do is just make it look like this thing's just in my normal course of business. It seemed to me like the biggest mistake he made was making the biggest purchase he'd ever made, because that does look really shady. But if I make $5,000 buys every month and I just buy Apple stock instead of Google stock, it looks just like everything else. And the fact that I called my family or whatever, I call them all the time. I think those laws are kind of odd to begin with, and they're signals to the market too. Don't you want people with information, expressing that in the market? But anyways, to your point, there I think there's a lot of shadiness in the Bitcoin space, and now that it's bigger, it's harder to manipulate. But there was like super shady stuff back in 2014, 2013. There would be like fake news bulletins and stories out of China. They even have like fake news reports, with somebody like talking in Chinese, and it looked just like a newscast. Saying like, China's banning Bitcoin or who knows what, or China's not banning Bitcoin. And then the people that were doing these, just like you said, they're either shorting Bitcoin or they're long Bitcoin. Then this report hits the internet, then the price goes up or down, 10%. That's a lot harder to do now because, the market is so much bigger than it was back then. But I still think there's shadiness. One really interesting one in maybe it was August. I can't remember. Bitcoin was on this big bull run tear like it's been on all year. And this guy that I know on my Facebook, he posts like, I need to know where I can short Bitcoin right now. And some other people like me on his feed are like, dude, Bitcoin is just on this rocket ship right now. I'd be really careful shorting it. And the next week, oh gosh, what happened the next week? I can't remember exactly. I think it was when China, I think they blocked exchanges or something like that. And maybe, and Bitcoin dropped like 20%, like the very next week. And this guy used to live in China. And so I was thinking like, oh my gosh, just like you said, like, did he have inside information, from the Chinese government that, this ban is coming next week, and he shorted the thing because, he knows this is coming.
He certainly gets a little red flag for having a public record of just wanting to short it.
Yeah.
Facebook.
But again, did that impact me? Like I owned Bitcoin at the time, it drops 20%. That was a lot of money for me, but it didn't really matter. I would have been in it anyways. If he made some bucks off some inside information, that's fine. I held through, and it's probably like 5 times higher than it was. So I think that just, kind of supports like the idea of like when you get an investment, it helps to know the investment, to understand the investment, be comfortable with it, versus, chasing the price or being on margin or putting in more than you can lose, putting in your rent money. Cause then, that could put you in a tough spot when all of a sudden, the thing drops 20% because somebody's, trying to manipulate it.
Since the last time we talked, so much has happened in this space, not just the price of Bitcoin going up, maybe like 3x or 4x since we last talked, something crazy. As we kind of wrap this up, what things are you looking forward to over the holiday season, or what do you have your?
Oh man, that's a perfect segue, because along the lines of this price dropping, so there are futures launching on the Chicago Board of Options Exchange for Bitcoin specifically, and then the next week on the Chicago Mercantile Exchange. So I think that one's Monday, December 18th, and the other one's Monday, December 11th. It's kind of complicated because these things are cash settled and they're futures. And so if people aren't familiar with stocks, the bottom line is that all of a sudden a lot more money, like Wall Street money. So right now, Wall Street has a problem where they can't buy Bitcoin so easily, because it's on these unregulated exchanges and it's not insured and it's not bonded and it's not regulated and all kinds of, for those types of reasons, Wall Street has been precluded and funds have been precluded from getting into Bitcoin, in a large part. Like if you're JP Morgan Chase, you can't just go and buy $1 billion worth of Bitcoin. Like you might be able, like you can probably go and buy $1 billion worth of, yen or rubles or euros. And so with these futures products launching, I think there's going to be a lot of volatility. And to the point earlier, about market manipulation and things like that, and just volatility in general, there's a theory out there that these futures are going to put downward pressure on the price, like huge downward pressure on the price. I'm just going to, hold through it probably, unless the price shoots up, which could also happen. But if it shoots down, I'm just going to hold right through. But that could be, some concern for listeners. It'll be interesting to see what happens, like now with the price, going up 25% a day and maybe 30% in the week or whatever, and everybody's posting on Facebook about how happy they are. It'd be interesting to see, if it does drop 75% or 50% overnight or in a week. It'd be interesting. And going back to like the slow issues, if everybody runs for the exits, you see that now on Coinbase sometimes where it gets overloaded with too many buyers. But I think we could see even more of that on the sell side. So it might be interesting, if Bitcoin dropped 25%, overnight tonight, and then tomorrow, 500,000 people decide they want to sell their Bitcoin, but only 200,000 of them can sell, and then the price gets hammered, and then it's Saturday, and another 500,000 want to sell, and Sunday 500,000 want to sell, and now all of a sudden, this thing is backlogged. You wanted to sell on Friday, the price is down 25%. Now it's Monday and the price is maybe down 50% or 75%. Can't remember the numbers I used, but the general idea is it could be rocky roads ahead, either on the upside or on the downside.
Well, there we have it. Rocky roads ahead could be upcoming. We really just don't know. It's just so fascinating. Dave, thanks so much for being on the Conundrum Crypto podcast. Congratulations on your the Bitcoin Strategic Trading Fund. People go to bitcoinbulls.net. And
okay, thanks, Gabe.
Yeah, man, thanks so much.
Coloring Crypto. Subscribe now. Coloring Crypto. Subscribe now.